Every generation believes it's smarter than the one before it. Every investor thinks they have found the secret, the one can lose investment that will make them rich, secure, and untouchable. But history has a cruel sense of humor, because every single time the pattern repeats. Belief becomes confidence, confidence becomes mania, and mania becomes ruin. This is the story of the can't-lose investment and why every generation falls for the same lie. It always begins with a story about something new, something unstoppable, something that changes everything. In the 1600s, that story was about tulips. In the 1700s, it was global trade. In the 1800s, it was railways. The 1920s had stocks. The 2000s had real estate. And today, it's technology, AI, crypto, clean energy, you name it. The assets change, but the psychology doesn't. See, every generation inherits a deep human flaw. We mistake novelty for certainty. We tell ourselves that this time, the risks are different, that the future is obvious, that all these smart people wouldn't be buying if it weren't a sure thing. But behind every single can't-lose investment lies the same hidden mechanism of self-deception. It starts with plausibility. There's always a rational story behind the bubble. Back in the 1720s, the South Sea Company promised to unlock the untold riches of Latin America for British investors. In the 1840s, the railway boom in England was fueled by a very real technological revolution. In the 1990s, the internet really was changing the world. And in the 2010s, housing genuinely did seem like the safest bet in the entire economy. Each one of these booms began with a kernel of truth, and then that truth got leveraged into a fantasy. If railways are the future, then every railway company will make money. If the internet is the future, then every .com will dominate. If housing prices never fall, then debt doesn't matter. In every single case, reality was completely swallowed by the narrative. By the time the public finally joins the party, the professionals have already stopped thinking, and they've started believing. And it's not because they're stupid, it's about survival. When everyone around you is making easy money, being a skeptic becomes a career risk. In the 1920s, famous economists said stocks had reached a permanently high plateau. In 2006, Fed Chairman Ben Bernanke said the housing market was just experiencing a healthy correction. And in 2021, fund managers called meme stocks and crypto a new paradigm. Different centuries, but the exact same sentences. The can't-lose investment always feeds on two powerful forces: innovation and imitation. Innovation gives it credibility, a new technology, a new policy, a new groundbreaking theory. Imitation gives it scale, ordinary people watching their neighbors get rich and deciding they want a piece of the action. In the 1840s, investors were mortgaging their farms just to buy railway shares. In the 1920s, barbers and shoeshine boys were trading stocks on margin. In the 2000s, waiters in Las Vegas owned 5 different houses. And in the 2020s, college students became day traders with nothing but a smartphone. Each time, people convinced themselves they were part of something too big to fail, that the sheer number of believers made the dream real. But the market doesn't reward belief, it rewards discipline. And when optimism spirals into euphoria, discipline vanishes. To understand why this keeps happening, you have to understand how the can't-lose lie really works. It's not just about greed, it's about the desperate search for certainty. The lie offers people psychological safety in an uncertain world. It tells them that risk is just an illusion, that losses are only temporary, that the crowd is smarter than the individual. It's a form of collective hypnosis, where everyone agrees not to question the obvious. That's why the warning signs of a can't-lose mania are always the same. Debt replaces savings, prices replace profits, confidence replaces caution, and criticism becomes heresy. When those 4 things happen at once, you're not in a bull market anymore. You're in a religion. Every financial mania eventually reaches the same tipping point, the moment of disbelief, the moment when the first cracks appear, when the first quiet investors start to sell. In the South Sea bubble, it was when insiders began cashing out. In the railway mania, it was when construction costs spiraled out of control. In the dot-com crash, it was when companies with no earnings ran out of funding. And in the housing crisis, it was when subprime borrowers started defaulting. Every can't-lose investment is like a pyramid of confidence. Once that foundation starts to tremble, the collapse is almost instant, and the higher the euphoria, the deeper the fall. But here's what makes it truly tragic. After every single crash, the same people who swore, "This time is different," say the same thing all over again. Nobody could have seen it coming. But that's just not true. The warnings are always there. They're just ignored, mocked, or silenced. In 1720, British MPs warned the South Sea Company was overvalued, and they were laughed out of the room. In 1929, a few lonely economists warned about speculation. They were called pessimists. In 2008, analysts who saw the housing bubble were told they just didn't understand modern finance. The same dismissal across centuries, because it's far easier to mock a skeptic than to admit the music might stop. And there's another cruel irony. The can't-lose investment almost always begins as an escape from the last crisis. After the railway bubble, investors flocked to colonial bonds. After the 1929 crash, they turned to real estate. After 2008, they turned to tech and crypto. And after every correction, central banks pump liquidity, politicians promise stability, and investors swear they've finally learned their lesson. They haven't. They've just found a new story to believe in. Why does this happen? Because human memory is short, but financial memory is even shorter. We live long enough to hear about past crashes, but not long enough to truly feel their pain. And it's pain, not history, that really teaches restraint. That's why the generation of 1929 became savers, and why their grandchildren became speculators. The longer a boom lasts, the more people mistake it for safety. And the safer people feel, the more risk they take. Until safety becomes the greatest illusion of all. There's a pattern beneath the pattern. Every bubble follows the same 4 stages, and each one feels exactly the same while you're living through it. First, displacement. A new idea captures the public imagination. This changes everything. Then, the boom. Credit expands, prices rise, and early investors get very rich. Then comes euphoria. Everyone piles in, skeptics are ridiculed. You just don't get it. And finally, crisis and revulsion. Confidence collapses, panic spreads, and the same crowd that once shouted, buy, now screams, sell. And when the dust finally settles, the same post-crash headlines appear. Where did the money go? Why no one saw it coming? Regulators promise reform. Until the next cycle begins all over again. Today, we're once again surrounded by can't-lose stories. Artificial intelligence, green technology, tokenized assets. Some of these will, without a doubt, transform the world, just like railways, the internet, and credit once did. But that doesn't mean their prices will go up forever. History doesn't repeat itself perfectly, but it sure does rhyme, and the melody is always the same. When people believe something can lose, they stop asking what happens if it does. So what's the real lesson here? It's that wealth isn't built on believing you can't lose. It's built on knowing that you can and preparing for it. Every smart investor eventually learns that markets don't reward optimism or pessimism. They reward realism. The ability to see the world as it is, not as you wish it to be. Because the can't-lose investment isn't just a financial illusion. It's a mirror, reflecting our own deep-seated need for certainty in an uncertain world. And until we learn to resist that need, to question the story when everyone else is singing along, we'll keep falling for the same lie, century after century. The truth is simple, and it's brutal. There is no can't-lose investment. There never was. There never will be. There are only cycles of greed, fear, and faith, and the few who manage to stay sane while everyone else is losing their minds. Because in finance, survival isn't about finding the perfect bet. It's about knowing when to walk away from the perfect story. Thanks for watching. If this made you think, consider hitting that subscribe button and ringing the bell so you don't miss our next video. We'll see you in the next one.